Welcome to another edition of the Kansas City Multifamily and Triple Net Lease Minute. I'm Logan Freeman, and I'm always joined by
Alex Olson.
the one, the only Alex Olson has been just crushing the game this year. We're going to talk a little bit about that today, but we're also going to talk about some new projects that we've got. But before we do, there's a lot of talk around the commercial real estate space and how it's performing, looking forward, and where's inflation going, where are interest rates headed. And look, I think that the Fed made it pretty strong statement and pretty clear that if inflation and when inflation does continue, interest rates are probably not going to follow suit to the tune of until I think it was 2023 that they were going to really start to take some action in the last statement that they had. And I think it's because they're trying to basically make up for the last 3 or 4 years of inflation that has not hit the 2% projection. And so I think interest rates are going to be okay for the time being, but we got to think about the future. We got to think about 3, 4, 5 years from now, and how are you going to continue to solidify your portfolio in a way that allows folks to continue to be a hedge against inflation, and getting good debt right now and getting a good tangible asset that rises when inflation rises is the way to do that. And so we've been seeing quite a few new what I'll call 1031 buyers come into the market. We've been seeing cap rates continually to compress, especially in the multifamily space. And we've continued to see buyers that have been open to, I'm not going to say coaching, but the idea of another asset class that really allows for strong cash flow. And again, that's neighborhood retail shopping centers with e-commerce resistant service-based tenants like dollar stores and Ace Hardwares and things like that. So we haven't been on video for a while. We're excited to be back here with you guys today. Alex and I have been extremely busy closing transactions. I think we had the trifecta the last week. So we had 3 multifamily deals close, and we'll have, I believe, another one close this week and a new triple net lease deal that closes next week. So we've got a great pulse of what's going on here in the market. And, I'm really in tune with what's happening, not only in Kansas City, but on a national scale, because I have friends in Florida, a lot of friends in Texas, California, the Carolinas, Georgia, and a lot of these people are putting deals under contract, and we're seeing stuff trade. So I do think that investor sentiment, and especially folks that are doing 1031 exchanges are starting to see kind of the writing on the wall and get their assets in line. What are you seeing out there, Alex? What is your pulse on the market? I mean, you're busy closing deals left and right, so let's talk a little bit about those.
Well, we've been saying it for a while, right? It's a hot, ultra hot potato market, and we've got investors coming in now, even local investors, quite honest, here in Kansas City, where they're selling stuff and they're needing stuff to trade into, and they're going to continue to look into the Kansas City market.
Right.
And a lot of that is, they're looking for something in the $1 million to $5 million range, which is very competitive.
Yep.
And they're looking for cash flow as good or better than what they had before. And some of that might not be possible depending on when they bought that property, or at least their expectations might not be quite exactly where the market is. And so we're getting a lot of people interested in just what you mentioned, the triple net lease, recession resistant asset class.
Yeah.
And once you wrap your head around, I've had, 3 or 4 conversations in the last 2 weeks where, I mentioned it to them and they said, I don't even know what that is. What is it? And so I think the key point I'm trying to make is everybody wants the same thing, but keep your mind open to another asset class that is probably less of a headache, to be honest with you. If you talk to people that have owned retail shopping centers for a while, there's not a ton of midnight maintenance calls. and there's also not a whole lot of lift from your property manager. And everybody seems to be a little bit more, I mean, they're all professionals, right? A business owner is a business owner, and it's not a person you're dealing with. You're dealing more with a business. So it's just a different asset class. It takes maybe an extra few minutes to wrap your head around, but it's going to get you better returns.
Yeah. I think that you have to be open to everything and attached to nothing. As I continue to do more transactions in this business and meet more people who have been doing this for a lot longer than both of us, it's very interesting to see their perspective. And, I'm just trying to keep all those perspectives, kind of juggling all those perspectives and then making our own investment thesis based on those. But one of the things that I wanted to highlight as well was, some deliveries, and in some previous market commentary, go check out the market commentary from last week and this week. But, what we noted in that was very interesting from a delivery standpoint. There's going to be a lot of Class A product coming online here pretty soon. And I think 75% of it, everything that's in construction is to be delivered this year. And so I think that's one interesting point to kind of make, but also, the continued investment in Kansas City. So Alex, you highlighted a couple of those new developments, but let's talk through those. Cordish is making a big play. When they put up One Light downtown, everybody was like, whoa, that's a huge deal. And then shortly thereafter, Two Light was up. And now we're talking about Three Light. And I believe that they're doing another project called the Midland. So talk to us about what's happening downtown, and let's dive into those new developments.
Yeah, so I think it's real quick. So it's important to point out that the Cordish company really kind of revitalized Kansas City. So they deserve a ton of credit for developing the Power and Light District. And from that, they have continued to develop other projects. I think Two Light
Yep.
was completed in 2017.
Yep.
And now they're looking at basically another $140 million, 288 unit luxury apartments here in downtown, actually a block away from Two Light.
Yep.
And then that's going to be, again, your luxury style. And then on the other side, we've got a 139 unit affordably priced, so affordably priced for downtown, adaptive reuse project called the Midland. And that's maybe 2 blocks away from that. So that's, 139 plus 288, that's whatever that is, 400 and some units that are going to come online about at the same time, all downtown. It's a massive complex because Two Light and Three Light are going to be connected through a giant skywalk, and all those tenants will be able to share those same amenities. And so, they're anticipating with that. So that's great that they're building all this stuff, but what does that really do for the economy? Well, the two projects combined will create more than 1,000 jobs. And then also for me personally, it's going to create an optimism for the future of the city's downtown.
Absolutely.
This project's been stalled here a little bit, and people, COVID, this, the de-urbanization, is that really going to be coming a thing? Well, I think the Cordish, they've decided that, hey, that's not really going to be a thing. And so they've gone ahead and decided, hey, we're going to build this project. And who knows, maybe they'll build 4 Light in 5 years. I don't know.
Yeah. Well, I think that those are all great points, especially about the jobs. And, frankly, yes, we have a lot of suburban, development going on, but it's still happening downtown as well. And I just need to note the fact that, a lot of these are mixed use projects. So the price per door is not necessarily comparative to what it would be to build a suburban multifamily apartment complex, but we're talking $485,000 per unit to put those up downtown. And so, as you continue to evaluate projects, yes, price per door is creeping up, in Kansas City, but to build it new, the type of product that we typically transact in is going to be over $200,000 a door. And we're not anywhere close to the replacement costs yet. So, that's one thing to be thinking about. Rising construction costs are putting a massive limitation on folks being able to move into new homes because they're just not being built fast enough, but also the prices continue to go up. So I think that's probably the thread that Cordish is seeing. And I got to believe that Cordish has some of the top economists and financial analysts out there to be able to to forecast. So, it's kind of like the Google or Amazon effect. Whenever they pick a new market to go into, you then see all the secondary players start to pick up, the locations around that. I think it's the same thing happening here in Kansas City. So, okay, that was great. That's a great talking points to kind of go through. Make sure to check out the market commentary. We got a lot more detail on there. Yardi is just killing it. We signed up for Yardi recently, and I just love all of their data that they're continuing to put out there. So we have some information around rents in Kansas City via Yardi to check out as well. So with that being said, let's dive into some of our new projects that we have available. And I'll start us off. So I need to make a disclaimer that I have a minority ownership in this property. This is a mixed use asset in one of what I'll call, the trendiest areas in Kansas City. And it's over in the 39th Street district, very close to KU Med. It is like I mentioned, a mixed use asset, which has a bagel shop, a very popular bagel shop with a brand new 5-year lease on that space on the main level. And then above that are 2 top performing Airbnbs. And so we got 2 short-term rentals. This is a commercial building. And so from the standpoint that you have to have licenses and things like that, it's excluded because it is a commercial building. So there's no issues there. And I would say the reason that I'm looking to kind of move on is we implemented our business plan, right? We bought in a decent environment. We continued to raise the rents on the Meshuggah, bagel shop, and then also the short-term rentals have done very, very well. What I learned, and what I know Alex knows as well, when it comes to short-term rentals, it's very management intensive. And as I continue to think about my time and what I'm focused on, I believe that's a good time for somebody else who wants to be a little more active and or find a new property manager to come in and really take those short-term rentals to the next level or convert them to a long-term rental. Like I said, it's right next to KU Med. So the traveling nurses can be a great tenant pool as well. So that is going to be our West 39th Street mixed use asset that's on the top 3. So if you have questions, obviously I'm here, Alex is here to answer about those, but it probably will go to market, I would say late summer or mid to late summer. So kind of giving our investors the first look into that project, and I'm an open book. So happy to answer any questions about that. Alex, what else do we have on our top 3 this week?
So got another great project for those who are looking maybe in the $3 million plus range. And that is the Raymore Townhouses. Again, rewinding back to very part of this year, literally, I think January 4th, we closed on 32 units.
That's right.
So this is another 32 units. It's older, but it's also the price reflects that, and that they're about $30,000 a door cheaper than what we sold for one of our other clients.
Yep.
They're also, 10, 15 years older, but you can see the value there. And so that's a great project for somebody to get in here and you can even add more as time goes on because there's even more fourplexes on those townhouse row there.
Yep.
So that's a class, I don't know, I call it class B plus market in Raymore. And then in a similar, it's a similar location it's in Lease Summit, but that's the class B duplexes that we have where there's 14 units. And they're built in, early mid 2000s, so 2005 we'll call it.
Yep.
And a lot of people look at it as, well, man, it's a lot on a cost per door basis, but you're buying a class B, 5 years ago it would have been a class A product.
Right.
And so the price of lumber and construction, and the key here is that this is in about a 5-minute walk to downtown Lease Summit. And you've heard us talk a lot about Lease Summit in the past. And there's a $50 million project that I drive by probably at least twice a week.
It's a big boy.
It's pretty nice. And, the downtown is going to continue to be hot. I mean, Lease Summit Downtown wins several awards every single year for how they've redeveloped and continue to develop that area. And you get the great school districts, you get walking distance to downtown, you probably get walking distance to the high school.
Mm-hmm.
And I'm sure there's a grade school around the corner. There's like 26 of those in the town. So it's a great product for somebody in the $2 to $3 million range. And, love to get some feedback on these three so we can start reporting back to the owners and make adjustments as necessary.
Absolutely. And, those are all three great opportunities, I think, for folks that offer different opportunities for each one. And one thing I want to mention as well is, we have case studies, guys. We have case studies that we have completed that go through transactions very similar to this. Actually, one of them was in Raymore or very close to Raymore. The other one is a triple net lease neighborhood retail shopping center. And I urge you, if you're interested in learning more about those and or just how the mechanics of those kind of transactions went, reach out to us. We have case studies, we have pro formas, we have the rent rolls, we have the appraisals, all of that information to share with you so you can kind of forecast what you can expect from a cash flow standpoint. And so all of those things are available to you through the Buyer's Representation Success System. And we could sit here and we could talk about the economy a lot. We could talk about all of these different factors, but what we're going to do is we're going to specialize in what we do, which is Kansas City, Missouri investment real estate. So in and around this area, we are definitely the experts as you can reach out to. And what we like to do is kind of see where your timeline is, see what your goals are, and then let's look through these case studies and figure out what type of asset is the best for you. If you don't see it on this list, that's okay. A lot of the triple net lease deals we don't put on this list because frankly, we don't want to muddy up the waters with all of our off-market deals. And so the opportunity for you is to say, hey, I would love to look at kind of a triple net lease deal that is live right now. And let's evaluate that thing. We'll spend time with you working through that. I mean, we're doing that on a different transaction right now. It's a sizable deal, over $7 million. And we're very involved from the placing of the debt all the way through the inspection process, getting you to the closing table. So we're here for you as your resource. I'm not going to necessarily give you a ton of feedback in relation to the national economy and everything like that. There's plenty of data around that. What we're trying to do is give you the micro economic information that you need to make really good decisions. So with that being said, Alex, I always like to ask this question, and we're going to have a little bit of fun here.
Oh, let's do it.
Yeah, I'm going to put you on the spot right now.
Okay, I'm nervous, but let's go.
Okay. So in relation to where your headspace is right now, what is one quote that has really been helping you kind of push through and giving you some positivity? So, or you can just, mention one of your favorite success quotes as well.
It doesn't sound like it's a quote for positivity, but the one that I go through on a weekly basis, because it's short, sweet, and simple, which I like, which is, if you're going through hell, keep going, by Winston Churchill.
Yep.
Which basically, really to me just says, if you've got some things you're going through, you got to keep going. You can't give up. That's really just a story of not giving up, no matter how hard or how great it is.
Absolutely.
Even if you're going through amazing times, you still got to keep going. And that's one I live by right now.
Yep. Well, I drive by the statue of Sir Winston and Lady Churchill on Ward Parkway almost every single day. And so it's right there on the Country Club Plaza. And he is definitely somebody to keep in mind when you're thinking about going through tough times. We want to talk through tough times, go back and read his biography. So mine is kind of on that same light, but it's from the old Bill Bradley. I believe he was an NBA basketball player, but it's one that I've relied on my whole life, which is ambition is the path to success, but persistence is the vehicle we arrive in. And so you just got to stay persistent, keep educating yourself, keep making new connections with folks, and it's going to work out for you. So Alex, thanks for that. Any closing thoughts before we sign off today?
I'm all good for now, man. Let's go get some more.
Okay. Looking forward to connecting with you. Reach out to us. Make sure to fill out the buyer intake form on the Buyer's Representation Success System. Alex and I are going to continue to bring off-market deals here. If you have questions about any of the projects that we have mentioned here today, we're here. One phone call away, one email away. Thanks so much, Alex.